Welcome back to EDS, and in this video we are going to take a look at how you can manage active positions, how you can adjust them, how you can roll for a credit, and essentially how you can boost your returns. And we're going to do that by looking at some real life examples, some real positions that we have on, and some real adjustments that we've made. So first thing we want to do is we want to pull up our portfolio. Okay, so this is what our portfolio looks like at the moment. These are our positions: AMD, GDXJ, SMH, UAL, Intel, mRNA. We've got the Australian futures, LUV, and CMG. So what we want to do is, if we pull up our Discord, you get access to this Discord group inside EDS Premium. The link to that will be in the description, but you get access to this Discord. So if we just use this Discord as a log, because any adjustments that we make in the portfolio is updated on this Discord for everyone to copy. So if we look here, we can see on Friday we made an adjustment. We rolled the call spread down on AMD to the 160 165 strike. So if we pull up AMD, right, let's have a look at AMD. And see what AMD is doing. So AMD, let's have a look at the order change. So we originally had an iron condor on. The short strikes are at 135 and 185. So if we just pull that up on the chart, 185 on the chart. Of course, I have already made the adjustments, but that's okay. We're just going to show you. So 185, 190, 130, 135. That's the original iron condor. So this is the original iron condor that we placed on AMD. And we placed this, we opened this iron condor, we sold this iron condor when price was around here. Okay, so at the time of when we opened this, we were right in the middle of the range. And since then, price has pretty much just gone in one direction, and we haven't really seen a rebound. Okay, so what did? We rolled the call spread down on AMD to the 160, 165 strikes and collected $40 in premium. So what happened and what did we do? AMD moved all the way towards our put spread, and it actually breached our short put strike. Okay, at the time of when it breached our short put strike, as you can see here, our position was denoted as being in the money. Well, this put was in the money. So at that point, what do we need to do? We need to manage risk. Now, because this is a iron condor, the risk is already defined upon entry. It is perfectly fine to just leave this position as is. However, I felt that there wouldn't be any harm in rolling. I think it was a good opportunity to roll. We collected a respectable premium to roll. IV was high still, and we made the decision to roll. So let's have a look at what we did. So we rolled the 160, we rolled down to the 160, 165 strikes. And if we look at the order chain here, this shows us the history of the position. So we opened 185, 190 on the call side. We then bought back the 185, 190, and then we sold the 160, 165. So we moved this call side down to 160 and 165, which is basically there. So we've made a much narrower iron condor now. However, we did collect 40 cents in premium, and we already had $1.60 in premium upon entry. So we collected $1.60 on entry, and then we rolled and then collected an additional 40 cents. So that means now, on the entire position, we've collected a total of $2 in premium. Now, this is a $5 wide spread, so our max risk is $5. We opened the position with $1.60 in premium. We've now got we've collected $2 in premium. So what that means is our max loss is no longer $500. It's now $300 because we've collected $200 upfront. Okay, so we've reduced our risk, whilst we have reduced our probability of profit slightly. However, I think we should be okay. Hopefully we get a opportunity to close out in profit. Again, we're probably not going to hold this till expiration. We just need an opportunity to get out of this thing and take some profit. So that's the AMD trade. We've reduced risk, rebalanced our deltas, and now we're ready to go again in the week ahead. Very happy with this adjustment. So if we look at the next adjustment, we rolled the call spread down on SMH and collected 62 cents in premium. So if let's have a look at SMH. If you pull up the order chain, so we had an iron condor originally opened at $1.38. In premium, and then we made a roll, and then we collected another 62 cents in premium. This adjustment is very similar to the AMD adjustment, practically identical. So if we look at SMH, the original strikes on the call side were at 285, 290. So if you put this back up to 285 and then 290, so that's pretty much what the original iron condor looked like. We sold the original position when price was around here, and as we can see, same story with AMD. Well, of course they are correlated, so same thing. Price just came straight down, and of course our short strike here was breached on Friday. So what did we do? SMH, we rolled the call spread down on SMH to the 245, 250 strikes and collected an additional 62 cents in premium. Okay, so let's put up the order chain. We bought back the 285, 290 spread and then sold the 245, 250. Okay, so we moved this side down to 245 and 250. There we go. So we moved the call side down exactly the same as what we did with AMD, and by doing this we've rebalanced our deltas and we've collected an additional 62 cents in premium, which reduces our overall risk, because again this is a $5 wide iron condor, so any premium that we collect offsets our max loss. So our max loss is now less due to the roll and the premium that we've just collected. So again, with SMH, very happy with this roll, very clean. I don't really look too much at support and resistance, but if you do, then as you can see, we came off of that resistance there. Now we basically rolled down to a lower resistance level, and again the exact same thing with AMD. We came off that resistance, went down to that resistance. I don't trade off of support and resistance, but if you do, there you go. What else? So we did SMH. Total credit on the position so far was $2, and we sold an SPX 0-day to expiration trade, this was a beautiful trade, but we're going to go over that in the next video. So the only other adjustment we made on Friday was we rolled a short call down on GDXJ. So GDXJ was not an iron condor. GDXJ is actually a strangle. So if you pull up GDXJ, let's pull up the order chain here. So the original strangle was at 42 and 52, right? So the original strangle was there, and we put the trade on somewhere around, how long have we been in this trade? We've been in here for 10 days. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So here, so we put the position on here, and at the time we were in the middle of the range. Since then, prices just come back down. Prices has come down. Sorry. Our short strike has not been breached, right? Our short strike has not been breached. However, if we look at the IV rank of GDXJ, it's super high right now at 92, right? And this played a big factor in the early adjustment. I normally don't make adjustments unless any of the strikes are breached for the monthly positions that we have on. However, I did make an exception for GDXJ because of how high the IV rank was. So if we have a look at what's in the Discord, we rolled the short call down on GDXJ to the 48 strike and collected 37 cents in premium. Okay, so we originally collected $1.22 on the position, and then we bought the 52 call back, and then we sold the 48 call instead. So we've rolled this down from there to there. Okay, again, if support resistance means anything to you, this would probably look very nice right now. And we made this roll prematurely because of how high IV rank was. We did get a respectable premium to roll this, 37 cents on top of $1.22 already. because this is a strangle, we have an unlimited loss. So this just pushes our break evens further out. And all in all, I think this is a textbook adjustment, and hopefully we can see GDXJ have a little rebound over this next week, and hopefully maybe we can get an opportunity to exit the position. We want to see price obviously move back into the middle of the range, and we want to see implied volatility drop, or the IVR drop, and then we should be able to get out for a nice 20-30% profit at least. And in terms of adjustments, those are the three adjustments we made on Friday. One on AMD, one on SMH, one on GDXJ, two iron condors, one strangle. I hope that helped. I hope that made a lot of sense. Get yourselves a copy of this position sizing template. All you got to do is enter in your portfolio size, enter in what the current VIX level is, and then everything below will be automatically calculated for you. All you need to do at this point is just use this as the backbone for structuring your portfolio, and over the long run, you'll be just fine. You can get a copy of this inside EDS Premium. What is EDS Premium? Basically, EDS Premium gives you access to this Discord that we've been looking at. It obviously gives you access to the position sizing template. It gives you access to all of our portfolios. We do have multiple portfolios that we manage, small and large, so you can copy our trades, emulate our trades, regardless of what the size of your portfolio is. We do also have a full course, so there's no prior knowledge required. We'll teach you everything you need to know so you can learn and earn at the same time. Of course, the private Discord group where you can speak to myself and other traders, like-minded individuals. There is a 100% money back guarantee. So once you've gone through our full course and followed our trades for 6 months, if you haven't been profitable, then we'll work with you for free until you are, or you can request a full refund. So it's completely risk-free on your part. Right now, it's £1 a month. Price will increase for every 5 members that join. Whatever price you pay, that's the price you're locked in at. So you never have to worry about price increases. You are rewarded for getting in early. So with that being said, I'll see you guys on the inside.